Okay, so time out, time out. I gotta ask y'all this. How are you Jay Powell, right? How are you Jay Powell and you get pranked by Russian pranksters or whatever happened? Okay, how does your team let you go on a Zoom or whatever you're doing without verifying this is the official Zelensky? It's your boy Crypto Billy. I'm back with another one. It's getting crazy, man. The market, you might have seen by the thumbnail, it says sell all your crypto, whatever, whatever. This is not financial advice, and I'm not telling anybody to sell or buy crypto, okay? But it's just interesting what's going on inside the market. So we got this video that dropped that's saying, and a lot of people don't know if it's like 2 months ago or if it's recent, but he's saying that they will continue to hike the federal rate hikes, and in the midst of that, now you're seeing that 82% of 0.25. So the last two unique points of interest in the crypto market, the last two of them have been the fake Fed selling off the Bitcoin from the y'all know from that situation where they got all the big Silk Road, okay? And now we got Jay Powell going up here talking about uh the federal rate, and I'll play the video at the end, talking about the U.S. plans to Russian pranksters. Man, I can't make this up. Now, we did get the PCE. We did get the PCE information. It came in hot. But I don't think the traditional stock market actually took it too bad. We know the market actually priced things out. So maybe they have been pricing in this inflation. I'm not a micro expert or economist, but again, a lot of this stuff affects the entire cryptocurrency market. And as you can see right here, even though traditional markets are doing good, we are still seeing a little bit of pain inside the crypto market. And let me know in the comments what your favorite altcoins are. Another thing to keep an eye on here is Coinbase. You can see here for the short term, Yahoo Finance has Coinbase bearish, midterm bullish, and long term bearish. So we want to keep an eye on things like Coinbase, the DXY, and even things like the Tether dominance here, which is also pretty much trading in the channel. This is a weekly chart, so we could possibly go up from here. Who knows? Every time we start doing good, though, I will say this. You know what I'm saying? They come in and they do some wild stuff. I'll never forget how they went on the stage and they went on the stage like the Four Horsemen. You feel me? And then they basically talked about a crypto exchange that nobody's never heard of. So this is interesting. A lot of people are going to sell their crypto in May. You feel me? But the mixed signal is here because we still got these banks that look like shit coins. Literally, look at this. First Republic falls another 37% amidst rumors of a government takeover. Family. So again, don't that look like a rug? I guess I'm tripping. All right, so I appreciate y'all from sticking in, man. We still got positive information. You feel me? We got just in Mastercard partners with Polygon, Solana, and Ava, and others to launch crypto credential systems. So it's good to see that a lot of these like something like as Mastercard is still partnering with Solana, even what happened with the whole SBF situation. So if you don't see it, I see it, family. Crypto is here to stay. We just got to weather throughout this storm. And this is some of the things, the key points that I picked up from this partnership. So Mastercard's plan to expand in the crypto card program is considered bullish for cryptocurrency. The move by Mastercard shows that the company is confident in the future of cryptocurrencies and believe that they will become more widely adopted in the coming years. So this is a long-term thing. I know everybody wants to get rich overnight. They got the super deej in place for that. Join the link in the description. But still, a lot of these projects, family, especially the blue chips, are here for the long run. So you got to focus more on the long run. All right. So yeah, we're just going sideways, man. I don't know what you really expect in this. The best thing to do is just keep a positive mental attitude and be responsible. The U.S. economy growth rate has slowed down to 1.1%, indicating a potential recession is on the horizon. So you got to keep that in mind, that we are in a macro environment. I'm tired of saying it, family. I want us to say that we're in a bull cycle, but unfortunately we are not. And yeah, I'm gonna play a little bit of this video right here from Jay Powell, and y'all let me know what y'all think about it. How could this happen?
Your opinion, which countries also suffered more from recent political situation and in economy?
Well, I would say not the United States. You know, we have our own energy here, and so it's really not us. I mean, it's going to be the Eastern European. You know better than I do, but it's going to be Poland and the Eastern European countries that are right there in you know in the
So
close to Ukraine. I would think they're the
yeah.
ones who have suffered the ones who have. I'm aware that Ukraine's suffering is. I mean, I can't personally experience it, but we all see what's happening. You know, people like me just want to support you in any way we can. But I have limited ways to do that in my professional job.
So I just talked to Christine Lagarde recently, and she told that they have already tried to minimize inflation. It's um, they got already around 7% inflation. It's a prediction for them, but there are a lot of many countries. So what do you have your prediction about inflation in the US?
I do, yes. Our policy rate quite a lot last year in order to slow the growth of the U.S. economy and enable inflation to come down, and we think that's working now. And I think we're very much on track to get inflation back down to our target, which is 2%. A lot depends on what happens in Ukraine on that,
Mhm.
and what happens with Russia and their
Mhm.
energy, and also with the opening of China.
If the rate is raised further, the standard of living of the population will fall. So, how much should it fall in order for the Fed to stop raising the rate?
Hmm. You know, we've raised rates quite a lot, and it's the market is already pricing in two more quarter percentage point rate hikes. We'll look around after we make those two, and we'll say, you know, should we do any more? And then the question will be, how long do we keep rates at this level? And I think we'll
Mhm.
keep them there for quite some time.
Because the decrease in inflation is clearly less than we would like. And if it starts to rise, is the Fed ready to raise the rate sharply again?
Yes, of course, we will. If we need to raise our rates more, then we'll absolutely do that. We raised rates very sharply, historically sharply last year
Mhm.
to
Mhm.
get to the place we're at now.
No, in other words, does the Fed think that inflation should be reduced to 2% at any cost?
Well, so we think we do need to reduce inflation to 2%. That is our obligation. But I think the
Mhm.
path there, as we walk that path down to 2%, we'll also be considering, not at this point, but a little further on, we'll be considering